Actually, messing with what? That's just what it is. It is what it is. What it is. Yeah. All right. All right. All right. All right. Let's do it. We're in. So I'm working on my trading plan, as I said here. Just to be open and forthright, I think I already did, but this is my AI use here for this post. I was just trying to work on this stuff to attract folks here at some point. But I am in the midst of trying to build a tracker, and I was able to take a picture of a picture of a spreadsheet that just kind of says what it like. It's got labels of what it's trying to do, and this GPT is going to. We're going to see if it works because it says it's going to give me a file that will do an option analysis for me just based on me taking a picture of a sheet that someone's working on. I didn't open that sheet or do anything. So we don't know if this is really going to have working formulas or not. I said an operable sheet because this was the prompt that I used was I took a picture of the sheet that someone had, and I don't know if I can see it. Yeah, I can't really see it, but I took a picture of the sheet and it's got like trades that you took and um, the dividends that you might have received. This same stuff I was working on my sheet earlier. That's not the one. Yeah, there it is. My trade tracker sheet. Um, Although that's not the other. Whatever. There was another sheet I was working on that was trying to capture all of that stuff from the dividends because with the strategy, when you're getting the premiums for the shares that you've bought and then selling the shares when they are at the same price or better than the same price that you bought them. In the meantime, you will have collected dividends and whatever premiums you may collect. You may not collect dividends because you may not be in a dividend period. The dividend is just kind of the field on which you're playing, right? It's just kind of like it's there if you end up having to hold on to these shares for any length of time because by buying them at the price that they are today and selling the call on the option, which I'm gonna pop this open and see if yeah this sheet doesn't have everything I'm looking for, so I'm obviously gonna have to go back into it and well, let me see how much does it have. Do I have everything in it? Apparently I do not. Oh wow. So let's see what all this thing did because it's uh where's the view? Let me shrink it down just a little bit so I can see it. This is 100%. There it is. I knew there was some button I could click that would let me see it. And my eyes ain't so good, but I can see enough to see that we got our name of the company and the symbol, the shares that you bought and the price. that you brought them, the price that they are today. I don't know if I can get that to be live, but I could probably get. There's got to be some kind of way to get automation. I'm sure there is a way to get for me to get automation to bring that price into a list of stocks, because I'm not really thinking about. Actually, I know exactly what I could do. I could just go right to, yeah. I'll show you what I'm going to do so that when I try to do it later, I'm going to open up Thinkorswim. Oh, I can't single click it. I got to double click it over there. But yeah, I can download a watch list that will download the last price, or will have the last price in it at the end of the day. Yeah, a watch list that has thus the the list of stocks, get the last price, and then just extract that. And there's a way for you to use the internet or use these. Let me log into my. But yeah, there's a way to what's the word I'm looking for here? I can't think and type at the same time. Um, there's a way to scrape. That's what they call it. And with the tools of the GPT, I'm gonna figure that out. How to scrape the price. For it to go in, like not download a list and then extract it and do all that, but for it to go in and say, I need these things from this website. So I'm gonna go in and it will get the price, say thank you, come back and get that. I'm pretty sure there's a way to do that, but that's for me to continue learning. So I'm going to bring this over here. This, well, maybe. Oh, I guess I gotta do that first. Now I can bring it over here. This is a Swab account or my Thinkorswim account. And what I was talking about is, see, I can create my own personal list, which I've already done one, right? This one was the first attempt that didn't, and would probably be what I would do, right? So this was the downloaded list that I got somewhere and was able to import that list into the what do you call it? Into actually, I bet you there's some place where I can see my watch list. No. Okay. Well, it don't matter. Here's one thing. So this is a list of companies that are indeed high dividend companies, um, and as such, they are not high dividend companies. Been giving dividends year after year after year after year for like this particular list is for, I believe it's 15 to 20 years that they've been giving dividends. So a minimum of 15 years, they've been giving an increasing dividend year over year over year over year. And the dividend, I have to keep going over the same thing, but the dividend is the way that the company shares their profits with the owners. And at the point of the day that they decide, they give the dividend out quarterly, and on the day that they're going to give that dividend, they announce. There's a day that they announce ahead of time. They say like, okay, on October 31st, we're going to pay out a dividend for XYZ stock. This is the board of XYZ. So we're going to pay out a dividend on October 31st. So in order to do that, because you're constantly in the middle of selling and trading shares on the market, they say whoever owns the shares on X date, and it's actually called X date. So whoever owns the shares on, let's just say October 15th, will get the check on October 31st. Sometimes it's closer, sometimes it's further. But if they pick a date that they say, okay, somebody, they imagine them telling the accountant, go look at the books. Whoever owns stocks today, write that list down, and then get them checks out so that on the 31st they get their check. So they write checks to those people. Meanwhile, I own the stock on the 15th, but on the 16th I sold it to somebody else because the share just is constantly on the market. So I just will on the 31st receive a check or receive a deposit for that dividend. I've already seen this work a couple of times on my Webull account, with beginning with um, my first foray into trying to figure this out and to mess with it was with little penny stocks. And there was a stock that I bought because it said like, hey, you get $25 dividend for the shares that you have, or I can't remember. It wasn't $25. I don't remember what it was, but it I was like, wow. I think it was 25 cents for 50, whatever it was. I went in, bought these shares. On the strength that I would get this deal. At that point, I didn't understand. I thought I had to hold on to the shares until that date that the check came out or that the dividend was sent out. So I ended up holding it until it went down. And at that point, I didn't even have the wisdom to know that you could just hold on to it until it gets back to your spot, because that's ultimately what it did, get back to the spot where I had got into it a long, long time. And I probably would not have wanted to hold that money up, although probably wouldn't have been a bad idea to hold it up because it would have been just a thing would kept me from losing some more elsewhere. But it's all education. But here's the thing: there's gimmicks that are played, because that one was kind of a gimmick, because I now that I'm thinking about it, I remember that it had some like really big dividend, which was attractive to my naive eyes. And guess what? It was a gimmick because it was something that they did. They brought in all these people to spike up their shares or whatever, and then that wasn't their normal dividend. It was a special one-time dividend. So you gotta ask yourself why they were doing that and all these things. So whatever. Not messing around with that stuff anyway anymore. Trying to be more understanding of this ocean that we are playing around in. I mean, I shouldn't say playing around, that we're swimming in. I dipped my toe in and said, "Wow, that's some quick current. You can lose money real fast. You can make money real fast, and all of this kind of stuff." So where I am at now is trying to learn these different strategies, and that's what I'm trying to get across here right now. But like I said, with this, uh, I only brought this one up because I wanted to show this. The yeah, to bring in the current price, you can bring that in now. So we got the symbol, the shares that you bought, the share price that you paid, right? Yeah, the share price that you paid, the current share price, the option symbol, which is the same as the stock symbol. I don't need that. How many contracts? One contract, because a contract controls 100 shares. The price that you got it for $34. Here's what's going on with this. You got it for $34. You sold a strike price for $34. Okay. So that means that you sold a share to someone on the 25th of October, or a contract rather, to someone stating that on October 25th, they could buy from you 100 shares, that you're in the process of this trade, you're buying those shares. You're buying those shares. That's what's called a covered call. You're buying those shares, covering them with this call that says, well, I guess the shares are covering the call, because you can apparently sell these. I don't know why you would do it, but you can apparently somehow sell these contracts without tying up the shares or having the share price um, for the deal. Because what you do, you have to tie up the money to buy the shares for 100 shares at that price. This is the price they are today. You sold someone those shares. Yeah. You sold someone those shares or a contract to someone that you would sell them those shares for $34. The price is $31, so they're not going to say, buy me, let me have those shares. You understand that? They paid $1.35 for the shares. Or I'm sorry, they paid $1.35 per share. Right? This is the option premium sold, right? So you receive $1.35 per share, 100 shares, it's $135 to give that person before the 25th, right? You sold them that share saying, hey, if you want to buy it for $34, you can buy it for $34 because they were thinking, man, it's going to be 36, 38. If it's $36, I make $2 a share. I paid $1.35 a share, and it's $36. So I still made $75. You see what I mean? They could, or if it went all the way up to 40, let's say, because they had a great report, which they did, and the price went down. But anyway, that is what they're gambling on or what they're betting on, what they're hoping to see happen. And what I'm saying is, I've got the shares. I bought them for 34.09, and I'm going to let somebody buy them for me for $34. Get loss on the shares. But wait, in order for them to buy them from me for $34, they had to give me $1.35. So 34 or the 9 cents rather that I would lose on that deal, right? Because I bought it for 34.09. I agree to sell it for 34. That's a loss to me. That's a loss of 9 cents per share, $90. But they're going to give me $135 for that $1.35, right? So I'm going to come out ahead on that deal right there, $65. As I'm thinking through it, we'll see if I'm right. Because I'm not your guru. I like that actually. Now there's a buyback price. You could buy it back for a penny, but you're not going to buy it back. That's a whole nother thing because why would you buy it back when the shares are 31 cents? Nobody's going to buy it for 30. It's going to expire. So what's going to happen on October 25th, which was Friday, is that that option is going to expire because nobody wants a 35. Nobody wants to pay $34, and in fact, 35.35. Do you see that? They are paying the $34 that they're giving you at the moment, right? On October 25th, they have a contract that is expiring that says I can buy those shares from you for $34 right now. And you say, right on. Happy to take $34. They're only worth $31. If they were that crazy, but they're not that crazy. What am I trying to point out to you here? That they actually pay $35. If they try to take, if the share, remember it was 34.09, you sold it for 34. If it went up to 34.50, they have the right to buy it from you for 34 cents or $34, which means they would be buying it for $34 and could turn right around and sell it for 34.50. Right? So they'd make 50 cents a share. But they gave you $1.35 a share. So that is not so good for them. So they're not going to take that contract back from you. They're not going to take that contract back from you until that price gets to $35.35. Then it'll be worth, I got my money back. That's all they would get. They will have paid $35.35 to me and turn around and sell it for $35.35 plus share uh, commissions and all of that jazz. So they're not going to do that. It's going to have to get above that 35.35 for them to, for it to be worth their time. How far up above that is worth their time? I don't know. They may be like, man, I want this because it's going to go up to 50 and I'm going to be able to come in and buy it for 34 and turn around and sell it for 50. Well, then I would lose out on that $16 that they're going to get. But I only paid $34.09 and I got $1.35 for it that I put away a long time ago. Or not a long time ago, immediately goes in my pocket. Then it's a question of what happens with that 34.09 share. Do I sell it for 31.67? Of course not. I'm not going to do that. Do I sell it to the person who wants to buy it for 34? Well, I already got $1.35 out of it, so sure, I'll sell it to them for 34. But if they're going to buy it for 34, it's only worth $31. They're not going to buy it for 30. They're not going to exercise the opt. Yeah, they're not going to buy it. They're going to let that expire. And therefore, and like I said, there's you have a way to buy it and move it to the next day, which is moving it forward to, this is, yeah, you can roll it forward to another week, in other words. So they're showing on this sheet between ChatGPT and a picture. Oh, I grabbed the wrong thing. It's showing proceeds from expiring option premium. Right. So I've gotten $135 in premium. I don't know that this has a way to add premiums every time. See, the sheet I was wanting to make had like a spot, and I got to find my sheet. Where's my sheet? That's the one I downloaded from the Trade Record. Dividend crap started with dates. Yes, this is my sheet. What the price, what the symbol is, what I paid for it, how many premiums I've gotten. How many dividends I've gotten. The total in premiums and dividends. My new break-even price, which my break-even price is going to be the price that I paid for it minus the dividends that I've received. Why is it divided by 1? That just is the same thing. Like if you remove the divided by 1, it's the same thing, isn't it? Yeah, it's the same thing. But it shouldn't, it should be the price yeah, that's not right. Because I want the price, I want the total dividends paid, so it is the price minus my break-even price is going to be the price that I paid minus the total dividends plus the total premium in two, right? Two, right? Because then, and my total investment is the price that I paid times the number of shares. Okay. And the premium, let's say that I got a premium. That one said $1.35. We'll just stick with that. That's way higher than it would be for that kind of shop. I don't know if it is or not. So now I could sell it for $4.57 and still be even because I've already made $1.35. But I'm not going to do that. I'm always going to sell it for the price that I got it because I'm also going to, in the meantime, receive a dividend of, let's just say, 50 cents a share, which, while it drives my break-even price down, it ultimately just says it's still making money for me because I will still be getting that dividend over the course of time. At some point, and this is what that dude was trying to do with that sheet, and I'm trying to figure out is what's my ultimate profit here? Because let's remember that this is going to be the total is all going to be times 100. Now, this thing won't work because that quantity is off. That quantity, no. All right, stop. Because the contracts are for 100. This thing, that sheet was for just the dividend, not premiums, because I don't have 100 shares. I'm doing 100 shares. Well, one contract. But is that right? I bought the shares at $5.92. I collected a premium. A premium? Yeah, there's no other expenditure except for the price of the premium. Because of the rollover, the prices of the premiums might decrease. So instead of it being like $1.35, because as you may remember from seeing in that other sheet, there's a, what's it called? There's a charge, not a charge. Yeah. There's a credit because you're so in the case of the one deal, right? October 25th, which was this Friday past. So the stock was the contract was for and that other one was Harley Davidson was $31 was what you paid for it. $34.09 is what you paid for it. The price of the stock now is at 31 something. You sold a contract for 34. If your contract was for 34, that person's not going to exercise it. But let's say that it was closer to where you were, that you were like, oh man, they're gonna take that money on Friday. They're gonna take it, and let's say it was $36, or getting close to $36, because they could take it at any point. So if it's at 35.35, we determined that was that break even spot. If it was at that spot, then I'm gonna need to get, or if it's getting close, or in any case, right? You want to keep rolling it over if you've got them. That's the whole point. You just get it, and as long as you can get that premium on it, and as long as he says the numbers make sense, as long as you're getting 1%, That's the key, is how much is that premium? Because the same way that that guy is thinking, well, I bought it for 34, I can buy it for 34, but it cost me $1.35 to get that right. So now I really need to be able to sell it for 35.35. Well, I need to be able to say that I'm making 1% on my money. That's why that total investment's important, right? Because I'm making 590, let's say 592 is the total that I paid for it. Is that $1.35 premium? Does that do something, right? Because if I no, because that premium is $1.35 divided by the price I paid for it, 592. That's 22%. Like obviously that's what I said. That's way bigger than it would be, right? But for me to make the money, right? Let's make this more reasonable. Let's say the premium was only 30 cents, right? So you've gotten 60 cents in premiums. Well, actually, we're looking at 1 week, and we're going to kick out the dividends because the dividends are happy accidents in the strategy. You're on that field so that if you do end up holding the stock, there will be this added, because the dividend will also be what makes your stock attractive in the up in the coming to the X date. Because remember, the X date was when you are going to be charged, or when you're going to be recorded as the person who gets the stock or who gets the dividend. So there are people who, like I did in this particular case, I bought that loan stock just to see if indeed I would get the dividend for it, which I did. So I had 14 shares and I got whatever the dividend was. I took it all out of here now, but so here you have, if it was 30 cents in the premium, then you would have, well, if it were 30 cents in the premium, you would have 0.30 divided by the 592, because that's how much you tied up for that stock, and that's 5%. That would be awesome. And I'm not; these are not rational. These are not realistic numbers, because it's not even on that particular stock. Because most of those are a little more than 592, and that this was just me looking for companies that paid a dividend, and I wanted to hold them to see if indeed, if I held it, got rid of it, would I make the would I ultimately be even? And then you can kind of see where 30 cents is half of $6. So that's, of course, 50% or 5%, or you can kind of see that. And the place you're going to actually see it, to see some realistic stuff, is back up here with so here's a company. It's just one that was up there, PPG. I don't even know what it is, but if you wanted, like, if it was $126.45, and you wanted to sell somebody the right to buy it at 127, so you bought it for 126.45, and you're going to sell it to them for 127, or they have the option to buy it for 127. But in order to do that, they're going to give you $1.05 right now, and you go buy your cup of coffee, and that's $1.05 gone. That's out of the system. It's in your pocket and away. Now you have a share of stock that's it's $126.45, still yours. You can't sell it because he has the right to buy it on November 1st. See, November 1st, he has the right to sell it for $127. That's the strike price. $127 is what you have agreed to sell it to him for, even though you bought it for this, because he thinks it might go up. Now here's his problem. He's giving you $1.05 for it, so he has to get $127.50 before it makes any sense for him to buy it from you for $127. Because already he's spent more than $127 on it, if that's the price that he's trying to get. So it needs to be more than that, because you've been made whole, because you're selling the right to, if it goes up here to $131, you're going to be stuck having to sell it at $127, and you're missing out on that $4 jump. He gets it. But that's okay, because that's that other light altogether. I don't even need it. Oh well. Yeah, there we go. Yeah, that's the deal. There is, he's gonna need to buy it at 127. He's gonna need to be able to turn around and sell it for at least, no, I'm doing that wrong, because I'm adding that price there. That's my value of it, his value of it. He's selling it for $127. He's already turned around. He's already paid $1.05. So for him to now give me $127, he's got to be able to turn around and sell it for $128.05. So unless it gets up to $128.05 for him to be worth selling it, or to be worth buying it from me, then I just keep that premium. And then if the price is here anywhere below that $128, he's not going to buy it back, and then I can let it expire and roll out the option. Or not roll out the option, start all over again on Monday morning, which is what we'll do. Because if you look at my particular trades with this deal, we were talking about Harley Davidson. So let's look at Harley Davidson. Why it doesn't show my trades there, I don't know. But do this, so it'll show me everything. So yeah, right now I have 1,000 shares of Harley Davidson. I bought them for $36.18. They're currently at $31.85. So I'm out this much. 36.18 is where I got in. Out here. And it's just gone down to here. So I'm out that money, but I'm not out that money because I don't have to do anything with that money until I pay until I sell it. I mean, if I just refuse to sell it until it gets back to the 36.18 that I paid for it, I lose nothing except time. I just have to wait till it gets back there. What are the odds that it's going to get back there? Well, this is what it's done over the year. This is where it is. Started out last October, way down here. It worked its way up. It's gone sideways and done its thing. And this is where it is now. This is the last 30 days. This is a blow up here of this area. All I've done is taken and blown up this area. Well, actually, ow, I just messed up. Oh well, that's what it is that area. So I'm not gonna worry about it because, yeah, because this is the 27 right there. So this is what that is that blow up there. Now, I leave this one alone so I can kind of see it for the whole year. And there, I mostly want to know what it's been doing the last month, but that gives me some assurance that I'll be okay. Also, if you look at that, you can see that these are those dividends I was talking about. 16 cents, 17 cents, 17, 17. Is that the dividends? Yes. So if I've not gotten rid of this by December or thereabouts, because this is last year, not necessarily will it be the exact same date, but you can see it's every 3 months. So every 3 months, they're going to come by with a check, 16 cents. Let's look at that. It's going to be 16 cents, or no, the last one was 17 cents. So we'll just say 17 cents, because the reason we get these companies is because they have had dividends for many, many, many years, over 50 to 10 years. This country's company is 100 years old. So for many, many years, they've been giving out dividends. We know that much. And in those dividends, we also know that to make it onto the list, to make it onto my watch list, I hope they're on my watch list. They're not on this one. They must be even higher up on the King's list or something. But to make it on the list, we know that they've been giving out dividends increasingly over the years, and they're a decent company that ain't going nowhere tomorrow. I mean, obviously they're going down right now, but that's, again, within a context. So back to where I was talking about that person who decided that they were going to sell or buy. Oh, I'm doing this one from scratch. So 31.80. Oh, that's right. Hello. I did have an option that traded that went away. Right, like here I've got, and I've got this is a working order, so I have it in there that I will buy, or that I am willing to sell my contract. Oh, this is that calendar spread. Because in this, I am buying the option. I'm doing two sides of that trade that I explained a minute ago. I'm buying one side for March. So I'm saying that I am willing to, I paid a premium the other day. This isn't showing it. But I paid a premium the other day to be able to in March of next year, sell this stock for $23. This stock being Intel. And chase it. It was just something we were looking at, and I was like, okay, I'm going to try and figure this out. So this is bumper cars. If you see that right there, that says simulated trading. This is not real money. These are simulated values. So the Intel, I already have some, it appears. Where's the view trades button? Right click, view orders, not trades. Okay. So it's just there as an order, not as a trade. I don't know how to tell the difference. Okay, so that was just in there as an order. The Apple is the same thing I'm doing with that one. I have an order I have an option that I bought. So I paid a premium to be able to sell Apple at strike price. Where's my? No, I don't see my contract. What the price is? Oh, 230. There it is. So I have the right to sell Apple since I don't have that order in. Okay, so I have the right to sell Apple in February for 230. Since I have that right, this is it's about control. Since I have the right to control those shares right now. So in this case, I did not immediately buy the shares, but I am committed to buy those shares. So that money is out of my account to buy those shares at $230. Plus I paid a premium, and right now they're worth 231. So if that price were high enough above my 230, above my premium that I paid, I could just sell it and say, okay, I'm selling them. Well, now I can't because I've also tied myself into another contract with someone else who has agreed to buy them for 230, the same as me, right? But they're going to give me a premium. That's not the premium. They're going to give me a premium. They gave me a premium. I don't see it. Ooh, this is why I said I ain't your guru. I'm trying to learn this crap, man. It's crazy how you understand something and then you gotta come in when you're trying to explain it. That's why I'm trying to explain it so I can see where I don't understand. Because I'm buying the right to sell it in February for $230 to buy it for $230. And now, because I have the control of those stocks, those shares, I'm selling you a right to buy them for $230. So, yeah, okay. So here's my risk. I sell you the right for 230. If they go up, depending on how much they go up, you might exercise that option to buy them, which would trigger me having to buy them because it's above the 230. So I would still get the 230 from them because I'm committed to buy it for 230. Correct? Yeah, I'm committed to buy it for 230. It's now 231.41, but I'm also committed to sell them for 230. So the only thing is going to be the premium I paid and the premium I received. The premium I received, I recall to be about a third of the premium that I paid. because the notion is that this is where we get into that buyback thing. That as it gets, because I have room to manage it just like the other people, right? Because I am now looking at it from this perspective. It's 231.41. It's getting above the 230. Well, it's already above the 230 that they have the right to get it from me for. But how much did they give me in premium? Because if they gave me, let's just say 50 cents in premium, then there's no sense in them taking that. I remember it was a high premium. Well, let's just see what the premiums are on, not for then, but for here. So here's my position there. And this is the premiums. Yeah, it's like $4, $5.30 was the premium for that. All right, 230. They paid $4.90 to me for that, right? To buy that. So it needs to go up to 234.90 for them to make sense for them to buy it. So once again, what will happen is at some point I will on Friday, because this is November 1st that they have the right to buy that, right? So as we move through the week, and if I see that that price is getting close to that 234 that they need it to be, then I will have the option. That's why they call it options. I will have the option to buy it back from them, and that will look something like this, where you say, I will buy that back from you. And I think, let me see if it'll show me. Yeah. So it'll show me here that if I would want to buy from them that contract back, I would need to pay them $1.15 or market. I'm not sure who's getting that $1.15. Yeah, I'm not sure who gets that $1.15. But that $1.15 that I would have to pay, let me see what it looks like in the final thing. So the cost of trade is a credit of $1,000. I'm not sure that I understand that at all. Minus $13. So $1,150 credit. I gotta figure out what that is because I'm not sure. Because at the 115, look at the 230 for the next week. Because this is what you're basically doing is saying, okay, the next week I can sell that for $6.55. So I'm gonna lose my $1.15. So that's gonna bring that down to $5.50. $5.40. So that's gonna bring me down to $5.40 on the deal. No, no, it's a credit of $1.15. Because that one I sold for $5.30, I would now be selling for $6.55, which would be a credit of $1.15, which is why that shows $1.15 minus my commission. $1.15 times 1,000 shares, because it's 10 contracts. Each contract worth 100. 10 times one contract is 100, so 10 times one is 1,000. Right? So $1.15 is $1,000 more from there. And that would be the amount you would get rolled over for rolling it forward. And then at some point, you again look down here and you're constantly looking at this to see where you are in the future. Because, let me show you this, man. One of these things. Yeah, this one. See, this is the thing. There's formulas that are happening and working at work here. The more I read into and study this stuff and listen to videos and tapes and conversations and watch presentations, is this is the evolution of a thing that's, just it's old. It goes way back. I mean, when you think about it, this right here that you are most familiar with, these candles over here, right? These candles that you're most familiar with, even though you don't understand them, right? We've seen them our whole lives in the stock pages and on the thing, and they show them, and you kind of don't really know what they are, but they do. This is something that was created like in 1760 something in Japan, like to study the rice market. And then as I studied this options thing, they claim for it to go back as far as, and I can't remember which dude it was that was a one of the philosophers or whatever, Greeks, maybe Aristotle, I'll just go with that. But it was like he went around to all the olive presses and said, listen, I want to buy your press time. Like, I'll pay you now to use your presses on these days. Then that's a futures kind of thing, right? Because then when the people come needing to use the thing, this is my time, so I will sell you my time for more than I pay for it. And way back then, somebody said, oh, that's an idea, let's do it. And they've been running with it in various scenarios since then. And now, through the evolution of computing and technology and telecommunications and the ability to get real-time information, I mean, I am fascinated to this day. Like, I'm fascinated by the fact that I'm wiggling my deal on my screen, but it's also wiggling over here, letting me know that you could be watching me live. And I'm watching my man do his deal. I watch a channel where he's here, where I can see, just like you're seeing, I can see his screen and see everything he's doing to follow along. And then on my tablet, I turn them on over here on a whole nother service. It's amazing to me, the telecommunications of it all. I watch them on TikTok. Sometimes I watch them on YouTube on here and YouTube up here, because on YouTube, like here, he does this. On TikTok, and I think on a different YouTube channel, he stands and you've got the full screen. And actually, you can see this screen behind him, so that he can say, when I'm talking here, here, and here. And I guess he must have a touch screen, because you can see the thing moving. But whatever. I'm amazed at the ability that the technology gives us. The fact that I started out this hour talking about how I'm using ChatGPT to create that sheet. And I think I've told you before, I'm using ChatGPT to create my posts and to use, I said, listen, I want to make sure that, what did I tell you? I want to make sure you start. Yeah, can you remember? I keep retirement and learning in the SEO. I want people to know that that that's what I'm doing here. I'm trying to figure this thing out. So come along with me to figure it out. So thank you for being here. If you're here, you're not here yet, because there ain't nobody chatting, and I can see nobody's watching. But that's okay. When you do come check this one out and be the first one to give me a comment. Which would be crazy, because that means you sat here for a whole ass hour. Hopefully you can follow along with what I'm doing. Wouldn't that be cool to just kind of put little in your old videos? Boom. If you read that QR code now, I'm going to tear it up now. It don't exist no more. If you read that QR code, it takes you to a website that you win $50. I bet you get some. I wonder if it's rules against that. Be like, find the QR code in the picture. I just hide it in different spots, like they did the pineapple on that one show. Psych. They had a pineapple that, if you knew, you knew. I didn't know till years later. It was all 2 or 3 seasons in, but every episode had a pineapple. And now I'm watching it. Sometimes I see it, and there's no reference to the pineapple. It's just there. Like in the one scene I saw just yesterday or the day before, where dude was walking in to visit somebody who was in the hospital. He just brought him a pineapple as like you would bring flowers, and set it there. And I was like, oh, there's the pineapple. Like, I didn't know that I was looking for it in real time at the time. But anyway, what I'm saying is, I don't even know what the hell I'm saying. What I'm saying is, I'm trying to reach out to people who are like me, trying to figure this thing out. And young folks too, because young folks need to get on this. I'm hoping my kids will be watching this at some point. Or someone else, if they can't listen to me, that they get it. All right, what else was I working on? Matter of fact, I said I'm working on finding my trading plan, which I still need to do. UI, AI type tools. I need to look at my. I got a lot to do with this, man. Because I'm still trying to get a hold fully of the Dividends Kings list. Because this thing tells you places you can get them, or it just gave me a few places, but I don't remember getting them all. Because if I look at my that stuff goes way back. So the dividend stock list, October 8th. Okay. This was the aristocrats list. Yeah, but this was the list that I got from a sheet. What I need to do, so I don't want to throw this information away. I just need to figure out how to use it better because I forgot all about this one. But these are companies that are coming up. Well, let's take a look, see if that's what those are. There's KBH. KBH, is that right? With the chart dividends. November, yeah, that was November 8th last year. The last one was August 8th, September, October, November. Bing, no, that's not right though. If they paid on August 8th, then September 8th, October 8th, yeah, November 8th would be the third month. Nancy?
Yeah.
I thought you had been down here and gone.
Oh, I had to come back to get laundry. I didn't have peanuts.
So then they are due November 8th to
What are you
pay
talking about?
dividends. So if that's what KBH, so as of November, so there's a company that we will definitely be looking at to see. I'm recording. No, I'm just letting you know. I mean, that's the screen, not, I mean, there is a little like right here. So, ooh, woohoo. Come on screen, baby. Yeah. Now, I'm just recording, trying to figure out what I'm doing.
Sorry, I have to run upstairs.
Okay.
I've got to help you now.
All right. Bye, love.
Bye.
Do you need, here's a piece of tissue.
Yeah, I can do that. I'll get it.
All right. All right. So when, or not when, what was this? We were looking at KBH. KBH is listed, and we figured out it does pay dividends here coming up next week. It is not a company that we would be looking at because it does not do weekly options. We see that right here. This is what I was talking about needing to go through that list to determine because as I look at that list of, I thought this said they had weekly options, but I'm not, they don't have weekly options. November, December, January, yeah, that's not weekly, bro. All right, so let's look at who else? Well, wind's always coming up, so I know that's because that's the thing. Like my understanding at first was like we're doing just companies that are coming up on dividends, but instead it's that just as kind of an indicator, a flag, if you will, that this is a company that may be moving good for us, not necessarily to get the dividend, but it just makes it like prime. Like, well, there's when we've, let's first make sure I'm right about the dividend deal, right? So their last one was August 19th, so we can probably assume November or thereabouts, right? November 17th or thereabouts for their uh, option or dividend payout. So looking at them for the month or the year rather, you can kind of see the prices kind of wiggle waggle through the year down and up. And here they are now. currently kind of heading down, but in a sideways kind of vein by my eye, right? Like they went up, down, they're sideways here. What's next? Is it up? Is it down? We don't know. Not the issue. Well, it's kind of the issue, and may make it a little difficult to determine if that's the one you want to do. But again, there's a dividend in just a couple of weeks. So, uh, did they put the announcement date on there? Earnings, did conference call. They don't tell you the X date. Because that matters is the X date. So let me do something here and look at that real quick. And this is what do we say when? So when pays a dividend, it's not yet updated on here what their X date is, but last X date was the 19th, and then they paid out on the 30th. So you can assume then that it's about 2 weeks or so ahead of it. They're what did I just say? So August 30th. So we'll just say November 30th, just to figure that they're 3 months down. So at the end of November, so somewhere around November 15th would probably be the X date. So somewhere around here. Somewhere around here, this 2 weeks, you can expect, if my theory or whatever you want to call it is right, you can expect that their dividends X date will come out, right? As they have. So does it always go up before the dividend? Not really. Well, see this? Look at that. If you're in there a week or two before, because see, let me spread this out a little bit so we can get a count. Let me try and get a count. So if this is the dividend date, if I was to go back from here 14 days to that Monday, 24th, or I'm sorry, the 29th, that's not 14 days. What's the 19th minus 14 is the 5th. So right there, if on the 5th, just looking at the numbers here, because up here you can see the open and close. So here on the 5th, it opened up, or I'm sorry, closed at 73.55. So I would have bought it somewhere in around there. On the 19th, when they paid out the dividend, well, that was the X date. I'm thinking that would have been the X date. Oh, this one tells you X date. X date the 19th payment day. Okay, so this one is giving you the X date. So yeah, if 2 weeks prior I had bought it, yeah, it would have looked good for me. I may have even sold it already. May have even been optioned away from me. but I wouldn't care. And I wouldn't care if I didn't keep it because I would eventually get my dividend, which was amount 25 cents a share. I would have gotten whatever premiums. And again, you'll keep rolling those out. If all you're looking for is 1%, some of those places you might have lost it with them spikes, but all you would lose would be your grip. All you would lose would be your grip on that ride. And then you just let go and then catch the next wave. Not necessarily with this one, because remember, we've got a whole bunch. This is not even the big list, the ones that are, what do I call them? These are and some of these companies I've never heard of. Some I've heard of and never really paid attention to, which is the key. If you're not paying attention, you're paying interest. I don't know. I'm just making up stuff now. But yeah, I'm going to take a break, I think, because she's getting ready to leave. So I want to go say goodbye to my wife. But yeah, I got to go through this list and find all the ones who are not or who have weekly options. And I was going to show you that. I can tell somewhat, like right here. I just, well, I don't need to do it in any place in particular. But that's monthlies, as you can see, November, December, February. Interesting, isn't it? The January. February, May, that's even, And then there's some that are. The yellow ones are weeklies, and those are the ones that so, I guess I could do it this way. Hello. All I got to do is go weekly, not weekly. I can. Can I remove this from my list? Well, that's not fair. I should be able to take it off my list right here. Is there a way for me to do that? No, that's doing that. Mark now. Oh, send this stock. Now, is there an option? Because a lot of times some of these menus will allow you to add to the columns that are here. That's what I'm looking for. Customize. There it is. Is there one that is weekly options, monthly options? Maybe options frequency? Freedom. What did I say? Options frequency? Option. Delta, Gamma, Rho, Theta, Vega. That's some stuff I need to learn at some point. Okay, I don't see it, and I doubt that there's going to be a weekly column, but UVW, let's see. Weekly, wait, weekly and daily, not day, man, weekly. No, I keep forgetting about my old buddy, ChatGPT. Maurice is most helpful to me. Let me see if there is a place where I can even get it. That would be ChatGPT because that has connection. Out of the new, faster reasoning, great for most tasks. Yeah, this I've got the upgrade on the ChatGPT, so it does have access to the current internet. So hopefully, let's see what happens there. And I keep forgetting I can talk to this thing, although I don't know if I can talk to it while I'm using the microphone to do that. I don't know. The technology's so crazy. You probably could, because I think I could watch a video while I'm. It's crazy. Like, yes, there is a list of companies whose stocks are for trading. Weekly options are short term and expire weekly. Yeah, these are one. Up to date list. You can manage the ways of options, things like CBOE, of course. Why not? Or consult the brokerage platform. They often provide detailed lists of all securities that offer weekly options. Well, let's see. This is who we're using. Let's see if there is a place. I don't know where I would find it other than help, support, chat room. I don't think support's it. Because it's. Oh, I'm still in a screen. That's fine. Let's see if that will do. Support. Trade desk associates are available. Chat support. Yeah, that's okay. Is there not a FYI? What do you call them things? FAQ? An FAQ wizard? You know what? They got a thing called education. Let's see. How to drawings. I need to learn how to do drawings because I was trying to do a drawing there a few minutes ago. I was just trying to do a rectangle and it wouldn't let me. That's what I wanted was this right here. All right, I gotta go because I hear her getting ready to leave, so I gotta go say goodbye to my baby. Your stream will end immediately.